So let's talk about health insurance. Most people, the reason that I talk about this in this lesson is because most people, at least this is what we got in the clinical world all the time, was the question, we'd be talking about their health goals, and they'd be talking about the issues that they have and what they want resolution with. And then the next thing out of their mouth, when we would recommend what they should do, does my insurance cover that? You're laughing because you've done it. And I used to do it too. Does my insurance cover that? Well, no, your insurance won't cover anything that helps get you well. It's gonna cover a doctor visit, testing for disease that's already there, and then a disease management process for the rest of your life. That's what insurance covers. Oh, well, okay, well, it was nice talking to you. I'll think about that. Puts their insurance back in their pocket and runs about as fast as they can, squealing out of the parking lot if they can. So let's talk about health insurance, because I'm hoping if there's one thing that changes when you walk out of this room is that you really understand health insurance for what it is. How does it work? Health insurance is the policy or product of insurance to access the conventional medical system. Okay? In certain cases, health insurance will allow you to see a non-conventional specialist, such as a chiropractic physician, but this is still going to be in a reactive situation. When you pull out your insurance card, you're reacting to disease. When that thing gets processed and you get a claim in the mail, you reacted to a disease. And for most of you, that is not in your goals, to be reacting to a disease. Now, it's okay if you're in a situation right now or you're taking this class because you had symptoms and you had disease processes when you started and you're looking to get rid of them. But again, we need to make sure we're clear on this when we get out of here so that we can start doing things differently. Okay? Before I move any further, why don't we stand up? Let's get some air in our lungs here. I don't want to lose any of you. Deep breaths, please, in through the mouth. Breathe with the belly, not with the chest. Stretch your arms and legs a little bit. A couple more deep breaths, and then you can have a seat as you're comfortable with. So health insurance, you're either going to be able to access the conventional medical system, or you're going to be able to access very, very, very limited non-conventional providers. But either way, it's reactive. Either way, you have to have a symptom when you show up for your card to be processed. As I said before, one of the biggest mistakes you can possibly make in your health is to only do what your health insurance will pay for. Because health insurance is only built to react to disease. It will be your demise. That belief that you're only going to do what your insurance will pay for will be what keeps you from your health goals. I promise you. Because that insurance card in no way is built for you to accomplish your health goals. How many people's life insurance policy is to help them accomplish their life goals? Call it what it is, right? Health insurance is just improperly named, as we talked about before. And life insurance is the analogy that we like to use here. Sick insurance would be a more proper description, because most people carry health insurance. If something bad happens, they're covered. They don't go bankrupt if they get in a car accident and have a lot of medical bills, because they have their health insurance there as a backup. The only problem is we've been programmed to believe that our sick care insurance card is somehow supposed to keep us well too. But just like life insurance is improperly named, when do you cash in on your life insurance policy? Are you ever going to be aware if you cash in on your life insurance policy? Will you be there to cut a check from those proceeds? That is death insurance, ladies and gentlemen. It's that simple. Well, you may get someone who sells it who says, well, it's for the life of your other family. It's for the life of those you've left behind. It's death insurance. Because when you die, it gives money to other people or it pays off the debts that you had. Just like health insurance is sick insurance. It is only there to act once you're already sick. And that doesn't match your health goals. You can never use your health insurance to prevent a disease. It simply doesn't work that way. So the plan terminology, I want to make sure that you guys understand real quick what this stuff means. Because one of the questions we got in the clinic, we spent so much time trying to explain people's health insurance policies to them that I think it's worth going over. Okay? Has everyone ever heard of an EOB? Okay? It's pretty common. It's kind of like your invoice for when you go to the doctor's office. So it's your statement of services. This is what you had done. This is what was covered. This is what wasn't. This was your percentage. This is your deductible. Kind of gives you the overview of the visit. All right? You can read these in detail later. Network discounts or adjusted service rate. This is one thing that's important. In the clinic, we would sign contracts with your providers. And when we sign these contracts, we would agree to pay the adjusted rates that they would pay for an office visit. So if our retail price for an office visit, say, for example, if it was a 20-minute office visit, if our normal price was $110, we would be agreeing, when we signed on with this health insurance company, that they could pay us $90. So your health insurance is a big conglomerate, and they've got 70,000 or 700,000 insured lives. And they say, hey, if you want to be in network with us, you're going to accept the money we're going to give you. We're not going to pay those rates. We'll dictate what we're going to pay. This is what's been happening over the past 20, 25 years, is the insurance companies have been sinking what they pay to physicians for the same services that they used to. How many people think costs of doing business have gone down over the past 20 years? Nobody? You'd be right. Costs of business haven't gone down. But your physicians are being paid less for services today than they were 15 years ago. Do you think that puts a squeeze on some situations financially? What does this mean to you? It means that your physician has to see 40 or 50 patients a day to pay the bills that they used to pay with 25. Can you see how that affects you now? Because in the clinic, you are forced. You are absolutely 110% forced to move people through quickly, or you will lose money. That is why most of the time you're late in, and that appointment flies by. And you're only seeing the doctor, the one you're putting all the faith in the world in, you're only seeing him for like 2 or 3 minutes, him or her. Can they get the whole story in that amount of time? Do you think they can actually take in the amount of information that they need to truly help you get healthy in that time? Absolutely not. So the faith that we have in this system, it's a little skewed. There's nothing wrong with these adjusted rates and things like that until they compromise the care, which they currently are doing. Deductible. Everyone knows what a deductible is for the most part. It's basically the amount of money that you have to pay before your plan engages. Okay? When you have a deductible, for example, let's say you've got a $500 deductible, you still submit the insurance and the claim still goes through the insurance company. They will mark the network adjustment against your deductible, and then you've got less to pay next time you're coming in until you reach that $500 mark, and then they pay 90%, or maybe they pay 100% after your deductible. This was one of the areas that most people had no clue about. They didn't know what their deductible was, and they didn't realize that the deductible was something the insurance card had to be submitted. It had to clear through just like any other thing, and that they had to pay that out of pocket before their plan would engage. So it's important to know what your deductible is. Most of you will need to know this because this is how you're going to make decisions on what health insurance plan you pick from this point forward. Copay. Everyone know what a copay is? That's your part of the payment. It's a predetermined amount of money, whether it's a $10 office copay or $20. For most of you, the copay is different for a family physician than it is a specialist. For example, your copay at your family doctor may be $20, but to see a specialist it might be $40. So that's the money that you lay down right when you walk in. Oh, your copay is $20? Check, please. Usually your copay is in place to make up for the money that the insurance company cut on the back. That's usually what a copay is. Okay? Coinsurance. Coinsurance is the percentage where the way you bought your plan is that your insurance company pays 80 or 70 or 90, whatever the percentage is, and you pay the other percentage. That's what copay is. And usually copay is after there's a deductible given. So you're spending $40 for the visit right up front. The network adjustment gets applied, it gets sent through, and then you owe 10% or 20% or whatever your copay is. Okay? It's important to know what your copay is because that will cost you money in your premium. The larger percentage you're responsible for, the more your monthly premium will go down. If your copay is less, say you're only responsible for 10%, you're going to pay a higher monthly premium for that. Just like car insurance, if you have car insurance, the more care you can get or the greater coverage you have on your car, the higher your monthly premium is going to be. The reason this is important, ladies and gentlemen, is because premiums are skyrocketing. It is going to cost you more to stay sick in the coming decades than it ever has before. And if you're not ready for it, it's going to bite you where the sun don't shine. It's going to bite you in the butt. And you are going to be so surprised that it could ruin you financially. Or you will be so panicked because you will not be able to afford the same health care that you've been depending on for years and years and years and years, the same management process. And you will be scrambling to find out what to do with your health. Fortunately for those of you here, you're not going to be in that situation because you're going to be prepared, because you understand what's coming. So your premium is the amount of money that you're paying every month to have the plan. Obviously, we know what an insurance premium is. This is where you need to pay attention. If you do not have a health savings account or a flexible spending account, you need to get one. This is the first place you need to invest money now. If you don't have one, you need to get one. If your insurance provider or if your employer doesn't have a flexible spending account, you can go to your bank and open a health savings account. You don't need your employer to do it. Most of you have no clue about this. You can open up a health savings account anywhere. Almost anywhere. Most major banks have them, and most credit unions have them. Most banks have them. What a health savings account and what a flexible spending account does is it allows you to put tax-free dollars away that you can spend on your health, not just your sickness. We'll get to the details of that in just a little bit. But normally these accounts, I think right now the regs just changed. I think it's about $2,500 a year for an individual and about $5,000 to $7,500 for a family a year that you can put in this tax-free account for spending. Okay?